Well, we at ET now are also trying to assess what the impact is on the private equity space, how COVID has impacted deal flows, which sectors look promising, what the view is on recent listings as well as digitization. And we spoke with Gautam Mago, who is the general partner at A91 Capital, and it's essentially a little bit about the firm. It's a new investment firm. They raised their first fund of about $350 million in 2019 and invest up to $40 million in emerging companies across 4 sectors. That's consumer, technology, financial services, and healthcare. And some of the companies that they've invested in include Exotel, Digit Insurance, Attenberg Technologies, Sugar Cosmetics, Push Spices, as well as InShorts. Let's tell you a little bit about what Gautam Mago had to say. Well, he believes that COVID has definitely pulled forward the digitization, not just of consumers, but of businesses as well. And that's something that's been very evident. The future going forward, especially for consumer-related companies, is going to be omni-channel. In fact, he's of the view that companies have to have a very strong presence online as well as offline in order to survive, especially in this COVID-related world. In terms of, looking at the overall investment environment in the country, Gautam believes that it's never been easier or a better time to build a company in India than now. In fact, it said it's never been easier to get a company to a scale of 500 crores in India, because now that can be done over 2 to 3 years versus traditionally it used to take a longer amount of time. The nature of people as well that's starting businesses, he believes, is now driven by first-gen entrepreneurs versus large conglomerates. So the texture of the market as well seems to have changed a lot. And the fact of the matter remains that good, solid businesses with strong unit economics are going to stand the test of time in the long haul. On the news of Zomato listing as well, he believes that now the time is ripe for a lot of other internet companies as well to become public, to list over the next 24 months as well. He believes that it's very positive that the Indian capital market is more accepting to new companies now with strong unit economics, which may not necessarily be profitable, because earlier Indian companies were compelled to list overseas, and that environment, the environment in India was not conducive. So hopefully things on that front are changing. In the financial space, he says that many companies that are digital lenders or that are in the space of digital lending will end up doing well as long as they underwrite and collect well. And that most financial companies in India need to digitize or die. The competition will fill that gap up if it's empty. The regulatory environment as well for banks, he said, in India is a lot tougher than what it is in the rest of the world. It's very concentrated. Large banks control a large amount of the market share, and banks need to adopt and adapt to a lot of the consumer offerings on a digital front. He believes that some of the companies that he has invested in, or the company rather has invested in, can go public over the next 24 months. And they have managed to adapt to COVID. They have figured out a more restricted movement for work. Due diligence for them has also become a lot more remote, and the qualitative diligence has definitely become tougher. They will continue to invest in 5 to 6 companies a year. They will raise another fund over time. And as of now, the companies that they have invested in have performed fairly well.